Hello, this is Jordan. This video is being recorded on Monday, May 2nd, 2022. Thank you so much for joining me today. Hope everyone had a great weekend. In this video, I am going to discuss the gold-silver ratio and what it might mean for silver over the coming months. But first, if you haven't already, please subscribe to the channel, like, and leave a comment. I'd really appreciate it. Okay, so let's get right into it. So the gold-silver ratio, and the key takeaway right now is the gold-silver ratio, as you can see in yellow, it has broken out, and there's a measured upside target of around 90. So coming into today, it was just below 83. So you have that. And in addition, the macro environment is one that's not bullish for silver. And that's because we are, at least in my opinion, we're going to see inflation peaking, coming down, a risk off, bear market, recession on the way. And so initially, that's not bullish for silver. And I mean, initially, it's not bullish for gold, but very quickly, it becomes bullish for gold. And then eventually, when gold gains strength, breaks over a certain level, that is when silver outperforms, except if the bottom in precious metals or the low, if it's a crash low, then silver outperforms right away. And so in reviewing some history, we can look at 5 lows in silver over the last 25 years or so. So we have the one in late 2001, the one in late 2008, the end of 2015, summer of 2018, and then the COVID crash low in March 2020. And so we can see that and looking at the top, that's the gold-silver ratio. And so we can see that coming into these lows, gold outperforms silver. Now, the real key distinction here is, 3 of the 5, if we include the low at the end of 2015, which wasn't a crash low, but the market had crashed already before that low, the precious metals market. So we can include that. So 3 of the 5, when you had a crash low, you had that one, and you also had late 2008, March 2020. When the market is coming into a crash low, the gold-silver ratio, it's usually spiking into that low, and then after the market makes a low, the gold-silver ratio will outperform right away. And then you have the other scenario, like in late 2001, summer of 2018, where there isn't a crash low, but silver bottoms, but it still underperforms gold for a little while. I mean, it was quite a while after the 2001 example, 2018. It was quite a while until gold broke out in 2019. The silver outperformed gold for several months, but I mean, it was still in a downtrend, and it's silver versus gold, and then gold outperformed leading into the COVID crash low. So that's the question coming up. I mean, looking at the technicals in silver, they're they're iffy here. I talked about it in my premium update. There's 2 key levels. You have just below 19, really strong support there. And then you have just below 22, call it 22, 2150, 2175. So those are the 2 support levels to keep an eye on for silver. And you also have to take into account gold has really strong support at 1830. I mean, could gold go below that? Maybe. You have to take that into account, as well as the gold-silver ratio, which, looking at the breakout, considering the macro, that looks like gold is probably going to get to 90. What if it gets to 95 or 100? When you get to those numbers, then they start to, and you look at low 1800s for gold, then it potentially aligns with that $19 target for silver. So we don't know. Maybe the gold low is 1830. Maybe silver bottom, maybe it briefly spikes below 2150, 2175, and that's the low. But, if you don't get a real crash low in the sector, I wouldn't consider that scenario a crash low. If you don't get that crash low, then it's possible that gold will outperform silver, at least for a little while after that low. So these are some things to take into account. I mean, I have not been that optimistic on silver. I've been underweight for a while. Took a lot of profits in 2021. I did recently, add to some, bought a silver stock. Bought some small positions, added to something too quickly. So I made a couple little mistakes as far as timing, but I'm still been underweight because silver just lags, and it's going to continue to lag. And the only way it's going to outperform immediately is if you get some kind of a crash low here. And I don't know if that's going to happen. I think it's going to be, I don't know for sure, of course, but I lean towards the scenario where it's not going to be a crash low, but where precious metals can go lower here in the short term, over the next couple months into a low once the Fed really has to reverse course. So these are my thoughts on silver. But with all this being said, I mean, timing isn't everything. Timing's the only thing. Eventually, we see gold bottoming, rebounding, breaking out above 2,000, 2,100. Then at that point, that's when you're going to see silver outperform, in my opinion. If not then it will when it breaks 30. So you can always be a little patient with silver because it tends to lag. That's it for this video. I mean, the key takeaways, gold-silver ratio has broken out, has a measured upside target of 90. The macro outlook over the coming months is not bullish for silver. So keep that in mind. You don't want to be too gung-ho about silver, not yet. But look, that doesn't mean that silver can't bottom and rise with gold, late summer into the fall. In that scenario, if it's not a crash low, gold would outperform silver as they're both rising. So you can have the crash low or you can have that scenario. Silver's underperforming now. You don't want to be overweight silver yet. Let me know what you think in the comments, and I'll see you guys again in the next video.